Market conditions bearish in this bull market and accelerating to the downside. We've seen some of the shorter term indicators here. We're seeing momentum really aggressive to the downside here, now entering that extreme location on the reversal risk. We'll look at that pattern here in just a moment. Breadth also continuing to weaken, and sentiment pulling back off of those really extreme levels, but still in that upper range, that upper complacency zone. We are seeing a few really interesting things here on sentiment and buy-sell ratio, really a large acceleration on buy-sell ratio. We're seeing now at 0.15. That happened pretty quickly to get back to that 0.15, 0.10. Once it gets less than 0.10 and it gets down to that 0.09, 0.08, 0.06, 0.05 and 0.03 have been really low market bottoms. If we look at this chart here on the 2-year time frame, we get back over to some of these ranges here, and we're looking at those numbers. You can see that 0.13, 0.14, and some of the market lows are typically happening around that 0.10. That being said, traditionally when this starts to get this wide, this is not the end. This is usually the beginning right here. If you look at every single one of these crossovers and advancements as we get bearish, there were a couple little shorter term starts along the way, but typically once you get that first move higher, that's not the end of it. So this more than likely is going to either create some longer term consolidation here or a new downtrend. We'll keep a close eye on that as well. We're seeing indices which are also getting buy-sell ratios really low right here. We've already got S&P 500 down to 0.10. What that means is in this case you can see that it's got 200 stocks to the downside with 23 to the upside. So that's a 0.10. If it were the other direction, this would be 10. Right? If we had 10 to 1 on a positive or bullish buy-sell ratio, but in this case, this is 0.10, meaning the bulk of that volume, the bulk of that breadth is to the downside right here. And again, these are really precarious locations for the market right here. We're also seeing across the board sells and downtrends other than that shorter term VIX, which is that volatility index in the shorter term, seeing it spike back up here now for a couple of days, where we have the rest of the market conditions moving lower. Let's look at SPY right here, because we do have it pushing now. All those levels that we've talked about have all been broken, and it closed below those levels, below that 506. So 497, that 498 on S&P 500 or SPY, which is the ETF that we're tracking for the S&P 500, is also accelerating to that downside. And really markets across the board. Let's look at the Qs, which is the NASDAQ 100. That's technology, seeing a real solid bearish bar right here. Also seeing the Dow had already started that acceleration to the downside. It's now breaking through that momentum zone and really solid support areas right here. And that 236. Once this starts to happen, and if it visits this next level, then it becomes resistance. It becomes harder for it to get back up and continue that overall trend. The other thing too, and I'll come back to this, this may be a little bit longer update, but let's look at sectors here real quick, because we also are seeing sectors nothing really positive. We've lost that other buy signal that we had. The rest are now in downtrends. We are seeing commodities still continuing to move, and it's gold, oil, and silver. A decent move on gold yesterday, back up 1.5% as markets were falling. Still seeing that in silver as well, and oil, USO, which is right here, up flat, some volatility in that upper range. So commodities are really where you're seeing money moving to right here. A couple of up days on those, and interesting markets right here. Let's take a quick look at one of the other things I wanted to just glance through here is some of the Dow stocks. So when we're talking about the Dow Jones Industrial Average and it's moving, it's typically 30 of the largest stocks on the planet. So let's take a look quickly at some of those trends. This is going to be ranking them by order, by strength rank. So if we look at Caterpillar, okay, and let's look at the kind of the average as we go through these stocks to see where they're at. The leaders, you can see the 2 leaders, Cat and Microsoft, in pretty solid bars to the downside. IBM already weakening below the momentum zone. AXP, which is American Express, JP Morgan, you're seeing weakness there. TRV, which is Travelers, some strength. Goldman Sachs, but you can see the leaders are now retraced back to this level. These are the leaders. Once we get through this list a little bit lower, you're going to start to see where the bulk of these stocks already are. Visa, Disney, ExxonMobil, which is a leader, Apple, which has been in a large downtrend already, Home Depot weakening. This is Verizon. Procter & Gamble has already broken back down. You can see it's finding support at that next rung on that ladder, that 382. Dow Chemicals and Intel already in a pretty strong downtrend. Same with, I almost said Costco, but Cisco moving down here in that almost a reverse or an inverse of that momentum to the downside. When you start to see stocks in that downtrend, okay, a lot of these like McDonald's have broken down through all of these support areas, and it's going to be really tough for some of these stocks to try and get a recovery. Johnson & Johnson, United Health, I think, had decent earnings after hours. That one may gap. 3M, which has got a lot of work to do. You can see how much work a lot of these stocks on the bottom end of this, the weaker stocks like Nike, Boeing, Pfizer, Walgreens, and again, back to Caterpillar. So the strongest stocks in that group are already weak and pulling back. So the probabilities of the Dow really getting a good move from here, it's going to be interesting. A couple muscle stocks to consider and look through a food stock, consumer staple stock, and also have a health insurance stock, which is not quite broken into that upper momentum zone, but interesting right here. Right now at these levels with market conditions doing what they're doing, it's about preservation of capital, making sure that the risk is established based on your own profile of risk, and making sure that a lot of stocks that are moving higher in these kind of market conditions, the market just pulls them back down. So looking for real high quality, looking for stocks that may be working in some of these other sectors and commodities like we talked about, like gold and silver. That'll do it for today's update. Everyone have a fantastic day today.